Hi, welcome to another episode of Unlocking Medicare. I'm your host, Tyrone Carr. I have another special guest today, Lisa Marshall with C2 Financial. Really excited to have her here today, and I think she'd be a great asset. And we're going to talk about reverse mortgages and how they can benefit our clients or just people in the community. So, Lisa, if you don't mind, if you could just give me a little background.
Sure.
You know, who you are, CT Financial, and what you guys do as far as helping.
Absolutely. Well, first off, thank you for having me.
Oh,
this
you're so
is
welcome.
My first time doing something like this, so I appreciate you asking me to get some more knowledge out to the consumers about reverse mortgages, because they're the most misunderstood type of mortgage. Again, I'm Lisa Marshall. I'm a licensed loan originator in the state of Michigan. I currently work for C2 Financial. They are the largest brokerage of reverse mortgages in the United States.
Okay.
I work remotely, as do all of the loan officers who are licensed throughout the country. But we are all under the umbrella of C2 Financial as our broker. And that gives me the reason I love C2 Financial. They actually have a reverse division. There is no other large broker that has a reverse division, which has years of experience in the reverse industry. And actually, my boss sits on the board of the National Reverse Mortgage Lender Association. So I have the resources of the best. Myself, I have been doing mortgages. This year makes 10 years. I'd gotten out of the business prior to 2008 when we had the financial downturn, and I pursued teaching, and I actually taught consumer science, and I taught consumers. When I got back into mortgages, it's been 3 years now, I knew immediately I wanted to do reverse, because I really love working with adult clients, basically myself, my age and older, and I love to educate. And that's what a reverse mortgage is going to take to become the popular vessel of choice when looking at accessing a portion of equity in retirement from your home. But most consumers don't understand it. And I love the fact that you asked your viewers questions, if they had questions about reverse mortgages.
Yeah, being a Medicare agency provides a number of services here, but it's outside of just talking about Medicare on a micro level. We always like to provide additional information that may be a value add to the consumer, our clients, just to kind of help them just with everyday life. And so, I have certainly been aware of reverse mortgages for years, and I think they can be a great tool if it's used for the right application, just like
Absolutely.
Everything in life, if you use it for the wrong application, then naturally it's going to have a negative, consequence or reaction or response. And so in this case, we just want to help and provide education. So with that being said, so one of the questions that was asked from our clients, do you need to have a good credit score to get approved for a reverse mortgage?
Great question. A reverse mortgage is a type of mortgage, and it allows mature homeowners, 55 and up, an opportunity to access a portion of their equity. So unlike a forward mortgage where they are looking at your credit worthiness, with a reverse mortgage, they are not looking at your credit score. Although they do pull your credit report, they are not using it to evaluate if you can, if they're going to deny the loan or approve it. What they're looking for is your credit willingness, your willingness to pay your bills on time, or they're looking at, has there been a time frame that maybe the bills were not paid on time, maybe your credit cards were late. Then they're going to look at a letter of explanation. Maybe there was a death in the family. Maybe there was an illness. We're talking about a senior population that things are happening much more rapidly when it comes to medical. There might have been an incident. And so they're going to look at that time frame of when maybe there was a delay in payments. But what they really are looking at is your ability to maintain your home, to pay your insurance, your homeowner's insurance, your taxes on your residence that they're lending the money on, and your homeowner association or your condo dues. Those are mandatory requirements that you're going to have to pay when you do even have a reverse mortgage. Even though there's no principal and interest payment, there is still a requirement that you're going to pay your taxes and insurance and HOA. So that's what they're looking at in regards to credit. They're not looking at your credit score. They're looking at, do you have liens that may be on your property? They're looking at title. They're looking at those payment history. And if there's a 2-year payment history that has late pays for homeowners insurance, or a time maybe that you didn't even have the house insured, you did not pay your homeowners insurance, that still doesn't mean they're going to deny the loan. What they will do is have what's called a set aside for those payments. It's called a LISA, almost like my name, easy to remember. It's a loan expectancy set aside. And they will put money aside from the proceeds of the loan to make those payments for you.
So one of the things that I always talk about, and again, our clients typically are on a fixed income, and so they're relying on either pension, Social Security, maybe they have assets where they're drawing RMDs from. And so when you look at a home and you're talking about, well, this is an asset, but that's really truly, in my personal and professional opinion, would be it's truly only an asset if you're leveraging that asset to your advantage, right?
Absolutely. So
if you have a home, let's say it's $3,000-$400,000 worth of equity, and either your house is paid off or maybe you still have a small mortgage remaining on that home, how would you describe would be a better solution, whether it be a home equity line versus reverse mortgage? So Can you talk about how that can be beneficial for that person that's on a fixed income and how they could leverage this to their benefit?
Absolutely. Great question. And people do think, well, why don't I just get an equity line of credit? Well, it has the same intent where you're accessing a portion of your home equity. However, there is a big difference. A home equity line of credit that you would get from the bank would have a required payment, and where you're already saying that your potential client might be on a fixed income and they want to get money out of their home, they're still going to have a payment. And in most cases, it's a variable rate, so you can't even know how much that payment's going to be from month to month. That loan, a home equity line of credit, also is your house. If you don't make that payment, they can foreclose. With a reverse mortgage, the difference, you do not have a payment. You're accessing a certain portion of your equity. You do not have a mortgage payment, and you are not going to get foreclosed on because you're not making a payment. It's a non-recourse loan, a reverse is, which means if the value of the home is less than the loan amount, your heirs or yourself are not responsible for the difference. And that is not true with a equity line of credit.
So with a reverse mortgage, but a person can make a payment if they so choose to, or they don't have to, they're not required to, which is kind of like the benefit of doing a reverse mortgage, because then if you're someone who's on a fixed income versus an equity line, you do have to make that payment. So now you're pulling from a fixed income coming in, and now that money is allocated for that specific reason. Whereas a reverse mortgage, you could do the upgrades on your home, you could going to buy Winnebago, for an example, and now you're not obligated to, now I have to have a monthly payment that maybe I don't have the proceeds. You're just using that equity in the home.
Absolutely. That is an excellent way of describing it. There are senior or older homeowners they're thinking about retiring, but they don't feel like they have their ducks in a row. And they know they want to age in place. They know they should have maybe long-term care insurance and some things set up for their future. However, there's not going to be that just extra income to make those payments. Accessing the equity in your home can be an excellent option to secure more options for longevity, for aging in place. You might want to put different, you might want to make your home more accessible for aging in place, not knowing what happens in the future. Taking out that bathtub and putting in a zero egress shower, things like that. You could take the equity out of your home with the reverse to do that, to do changes to the home, modifications to age in place.
Now, when you look at the interest rate on a reverse mortgage compared to a home equity line or just a conventional mortgage, where do interest rates kind of compare?
Right. Great question. Pretty comparable. I would say very comparable. They run kind of just about the same. It depends. There's so many different loan options on forward, even on reverse. Overall, I would say they're very comparable. But the beauty of it is you're not making that payment. Sure. So you're not gonna, it doesn't seem to matter as much with a reverse mortgage as a forward, because you're going to be paying a higher payment.
Sure.
With
so I know, again, we always emphasize we want to provide as much content and as far as helpful information to the consumer, our clients, to put them in a better overall, space of living, whether, helping reduce their costs. And so when you go into reverse mortgage, one of the things that, you hear often is like, well, if I die, I lose my home, or I have to pay this back. So can you expand or talk about what are the advantages to a reverse mortgage in today's climate?
Sure, yeah. There are several myths that just keep circulating around. I think the number one myth about reverse mortgage is that the bank owns my home. They just think you give over title at closing. That is not true. It is a lien against your title, just like a forward mortgage. You always own your home. And if you pass, your heirs, whoever you have left the home to, the home goes to your heirs. The servicer of the loan would be notified, and actually they have their ways of finding out, these there are services that notify lenders or servicers when someone's passed, death records, whatever. But they will, the family or the heirs will have an option on what they want to do. Do they want to keep the home? And here's a beautiful thing. If they want to keep the home, maybe it's been in the family, they want to keep it, they can refinance it just like you would on a forward. You would refinance it to pay off the loan balance. The servicer actually gives the heirs the advantage of only having to pay 95% of the value. So they get a 5% discount right off the top. And then they would just, refinance it, pay off the lender their amount, and the title switches. Or they can sell it, and whatever, they pay off the loan, and the heirs get the rest of the money.
Now, if a person, let's say the heirs, or there's a surviving spouse, if they decide, say, we just don't want to deal with it,
right?
Can then they just, this is just what I've heard in the past, can they just turn the home over to the company that has the lien on the reverse mortgage?
It's called, I believe it's called deed in lieu of title. And they will sell it and they will still give you your money. Whatever. You're still not giving them the home. They still will give you, they just want their money. That's all they want. They just want their money. They want the loan paid off, and then they're going to give you the rest of the value back. Yes.
So in that case, you're not looking at us in a situation where that person, I mean, if I were in that person's shoes, and correct me if I'm wrong, if I just said, I want to be hands off, I can turn it over to, C2 Financial. They handle the process of, prepping the house, getting it prepared for selling, and then they sold. They just take the difference in equity after paying off the mortgage. Is that paid over to the?
That's a great question. And first, so here's the beautiful thing for me. So I'm a broker, not a lender. I work with probably 10 of the top reverse lenders. And based on my clients' needs and their scenario, I'm going to go to the lender that I think best meets their need. So I never have money. I take my client to the money. And so after the loan closes with a lender, most lenders use a servicer. And some might service the loan themselves. But most of them, just like Forward, they turn it over to a servicer. There is a huge servicer of probably 80 to 90% of the reverse loans right here in Lansing, Michigan. And they are really trying to do a great job. I say trying to because the industry has had its challenges when the heirs take over, like when someone passes away. They are really trying to work with the Consumer Financial Protection Bureau in helping consumers to navigate that very muddled water right now. The best thing is for a person with a reverse mortgage, when they take one, to tell their heirs that they have a reverse mortgage and to put the information with their trust papers or their will, to put that information in there also. Where consumers have run into trouble and maybe even, caused some bad vibes about reverse is when people don't know that their family member or their heir had a reverse mortgage, and it's very confusing to them. And I could see how it would be.
Okay. Mm-hmm. What is the interest that's accumulated in the reverse mortgage? Because we know we don't have to make the payment,
right? So
it does accumulate interest, but is that interest tax deductible?
Another excellent question. So the IRS says that interest paid is tax. Interest on mortgage interest is deductible when paid. So if you're not making a payment in a reverse, you are not going to get that, is it the 1098 with your interest paid. If you didn't make a payment on it, you will not be able to deduct it. However, it is still a deduction when that interest is paid. Say you do make a lump sum payment on the loan. You come into money and you say, I want to pay that down. And there's benefits to paying it down. If you have a line of credit, that line of credit increases, so you have more money to use. That is tax-free when you take it out. You can deduct the interest paid on a reverse mortgage when it's paid. That might have sounded confusing. Again, I'm not a tax accountant, but these are the basics according to the IRS. Also, acquisition debt, that is the debt used to secure the purchase of a home, because you can buy a home with a reverse mortgage. Only acquisition debt can be tax deductible to the IRS. Did that make sense?
So could a person do a reverse mortgage? Let's say they have a mortgage on the home and they maybe got some credit card debt,
right,
and that interest rate on that credit card, let's say, is 20, 24, or even higher. Yes. And so you're on a fixed income and you're making payments on that. And you're like, all the income I have coming in is going towards paying debt. So is it beneficial? My understanding is that when a person does a reverse mortgage, they're taking that reverse mortgage just to pay off their traditional mortgage to eliminate, say, that monthly mortgage payment, and then maybe taking additional proceeds to help pay off any like credit card debt. So let's say between credit card and a mortgage, let's say you have $1,500 worth of debt, and now you're just paying that off, and so now you're freeing up the $1,500. Is that essentially what you're doing with the reverse mortgage?
Yes.
Yeah, one benefactor.
Yes, that could be a case. Now, it depends on the lender. You don't necessarily pay off those credit cards right at closing. You would take a lump sum of money out and pay that off. You pay it off. They're not going to pay it off for you.
Correct.
Okay.
So, and is there now, as a person just want to just pay off the original conventional loan or the mortgage on the home?
Absolutely, that's first.
And maybe they don't want to use, they just want to use it to eliminate that. But a person, because it acts similar to a line of credit, they can choose to take a lump sum, or they could take systematic monthly payments.
Yes. Yes. So that, I always think it should be called the option mortgage, because there's many options available. It's a tool. I love the word tool that you use, because it is a tool in retirement that gives you many options to access the equity in your home to be used for multiple reasons. As you said, there's a few different ways you can access that money. You could, right now I have a client that they want payments for 5 years. They're going to be receiving in-home care, and they anticipate 5 years they'll want these payments. So they're going to get the money available, the funds available, in a monthly payment of, what are they getting? I think they're getting $2,000 a month. And then they will reevaluate after 5 years. Now, why did they just not keep going? Because a 10-year payment, that's another option. 10-year means permanent payment. If they were to say, I want the permanent payment, it was a lower amount, because that's based on your life expectancy, and that might be 10 years. So that $2,000 that they wanted a month just became $1,000. So there's options. They need that $2,000 to cover the in-home care that they're anticipating. So that's, I think did I answer that question?
Yeah.
Oh, okay.
So, you know, if a person wanted to proceed, you know, just like if you're applying for a traditional loan, you know, you can either, ask for an inspection of the home just in case you kind of, you know, catch something that maybe there's like a problem with the foundation or roof, maybe a big expense that maybe you don't have the funds to pay for. So in a reverse mortgage, does a person, or are they required to have an inspection on the home prior to doing the reverse mortgage? So is that a requirement?
Great question. So more so than with a forward loan, a reverse lender looks at the value of the property. That's what they care about. They care about that property because that's what's securing this loan. As we said it when we started out, they're not really looking at your credit score. They're looking at your property, because they're gonna give money based on the value of that property. That's gonna tell them how much they're gonna give you, and the condition of that home. So as you said, there might be a major repair that needs to be done. If that is cited in the appraisal, they can set money aside for that if there's enough value there. So they can set that money aside, it's called a set aside, and have that work either completed, and it depends on the lender, either have it completed before the loan closes or after the loan closes. Title would hold money.
Okay. I know one of the questions that was sent in, being that, you know, typically people of retirement age are on a fixed income.
Right.
Do they require you to have like money at the time of closing, I would think that would be an issue.
Another great question. The beauty here, there are three types of closing costs with a reverse mortgage. There are the out-of-pocket costs, which of course you would get a good faith estimate. Everybody by law gets a good faith estimate of what these costs are going to be. The only out-of-pocket in most cases are the appraisal, and the homeowner would pay the appraiser directly, which I do not talk to the appraiser because laws and rules changed back after our fall of 2008, where it has to be totally discreet. The appraisal, the appraiser, we can't make it appear that we've coerced the appraiser. So the homeowner can talk to the appraiser. They can talk to the appraiser. I encourage them to talk to the appraiser. I encourage them to give the appraiser values of homes that have sold around them. They might not know of, maybe one didn't get posted or it was a cash deal, and they might have to look a little deeper for some values. Also, improvements that the homeowner's done to the home, and with receipts to show the appraiser. You want to get your value up as high as possible, of course.
Now, is there a percentage during a reverse mortgage that they give you of the home? So if a home is $500,000 in value,
yes,
and you've got a $200,000, mortgage allowed for remaining on the conventional loan, like how does it? Yeah.
Right, great question. So it's called a principal limit factor. And it is based on the home value, the age of the borrower, and the interest rate, those three things. So all those together, and an algorithm comes out, and it generally comes out to starting at 37%. The higher the interest rates, unfortunately, the lower the principal limit factor. So someone that was getting maybe just a year ago before June, because June was when the rates started going up, but someone that might have been getting 0.49, almost 50% of their equity is now getting 0.37. So the interest rates going higher lowers the amount you can take.
Okay.
That's how that is.
Now, another client sent in, a question is,
I love it.
My wife and I have several rental properties. Are you able to get a reverse mortgage for a property that's a non-primary residence?
Love that question. No. No. So a reverse mortgage is only for your primary residence.
Okay.
Now the beauty of it is you can take the reverse mortgage out on your primary residence. You can take equity out of your primary residence to purchase a second home or to purchase an investment property. And that is a great way to make money on your money, basically.
No, I think that's a great point, because again, if you're sitting on that equity and
it's not an asset, like you said, you can't get it.
And so being able to leverage that into something else to help generate additional income is just going to make you put you in a better financial position.
Exactly.
And so one of the things I always talk about from a health standpoint, being that part of the services that we provide is helping people with their Medicare, supplemental insurance, drug coverage, and healthcare. And so I would think that, in that there's no data to show all this, at least I'm not aware of anyways. If your income is and your debt income is a reflection of what you're able to do, whether it be outside doing more activities that you may enjoy. But if that's creating a lot of stress because you don't have a lot of surplus and you're living paycheck to paycheck, but if you're able to eliminate a lot of that debt, I would think that would have, I tell my clients, life is more enjoyable, right? So because you're more enjoyable, I would think that your stress level is down, which is naturally going to affect your blood pressure, your cholesterol. And again, there's no data to reflect this. I would just think that one would be like, I know when business is better now than when we first started, we went into business. Obviously, you have greater expenses and you have less profit margin. So, you're out there working and your stress levels are higher. Now, years into the business and you're further along, you're more successful, life is more enjoyable and you have less stress. And so
Absolutely.
if you're healthier, I always encourage clients, enjoy life while you're healthy. And so if you could leverage something to your benefit, I would certainly think that, should be open to a conversation at least I would suggest it. And
Absolutely.
and we have nothing to benefit from, somebody doing a reverse mortgage. But again, it's just providing value add to our clients to give them insight into something that may be a huge value to them. Leverage an asset that you have. Well, and again, it's really not an asset if you're not leveraging it. And so I think it could be a great tool. So
You're absolutely right.
what would you say is if one, to be fair, because I'm always about transparency, is there any type of objection that you would say a reverse mortgage would not be good for any particular type of person?
Sure. Who is it not good for? There are definitely people it is not good for. If you don't plan on staying in the house more than 5 years, if this is not your forever home, it's probably not a great option for you. Yes, you can explore it because maybe it does have some benefit, but most people, the best candidate for a reverse mortgage is a person that sees this as their aging in place home, that they want to age in place. Of course, none of us know, where we're going to, if we're going to have to go into long-term care, but most people I believe most of the population wants to age in place at home, good over 80% anyhow. So it would not be good for somebody that is thinking about moving. It is not a good option for someone that doesn't see their home as a good aging in place home. Maybe right now the home is way too big. A reverse mortgage could be a great option. We call it H for P, reverse for purchase, to right size their home. They might want to sell that large home. Let's just say it's $1 million house. They want to move to a 55 and up community that they can get the top of the line condo there for $500,000. They can bank the other $500,000 into another investment or do some other financial planning with it, and still not have to make a mortgage payment, just be responsible for their housing costs. And if that unit was, say, $500,000, they're probably going to have to come to closing with only $250,000. So now you have, do the math quick, $750,000 that you've got in investments. And you're living your best life in the community that is age appropriate, allows you to age in place, and you're happy there. So there's someone, it would not be a good idea to take it on the $1 million home that they don't see themselves staying in. It's not a good option for a person that the house isn't the right home to age in place. Who else would it not be good for? Wow, that's really kind of the industry two no-nos. Like you want to, of course, talk to your client. And I have a client right now that I looked at the appraisal and saw that the home has multiple steps. She's 85. Her bedroom's upstairs with the bathroom. Before we got the appraisal, I interviewed her and said, "Are you sure you want to stay there? Is maybe you want one level and with your master bath down there, because there are options. You can modify the home and put one of those stair wall chairs on." And she said she would be considering that. So I like to talk to my clients. I like to ask them what the home is like before we get too far into it. And then if they are thinking of moving, say, you can purchase another home.
Do you find people that will do a reverse mortgage? So on that example with that particular client, that they look at their home and say, this is not the ideal place where I want to be, right? But they don't have, cash aside for home improvements. Well, they'll say, okay, I need a ranch, a one level story. where everything's accessible, no stairs, I don't have to go down in a basement. They'll say, you know what, I don't have the money to improve this home. They'll do a reverse mortgage, make home improvements on that home, and then now they've increased the value of that home, and then turn around and have sold it to go into something that's more conducive to where they're at based upon their health. Would that, you say that would be a...
Okay, so what I'm hearing you say is take the reverse and basically kind of flip the house?
Yeah, pull equity out of the home and put that in there, because if I don't have, let's say for example,
Yeah.
someone's got, hey, I need $30,000 to make improvements to the home, which, you know, talking to a broker, you know, the real estate agent says, okay, well, this is going to increase the value by 50,000. So now they're making an additional $20,000, and then they're turning around and selling the home. I mean, could you do that?
I'm kind of laughing because I know we're talking about reverse mortgages, but I do forward mortgages also. And I'm a broker with the largest broker in the country. What I would do in that scenario, I have hard money lenders that reverse lenders don't want to hear it's a fix and flip, because that's really what you're talking about is a fix and flip. And so that's my knowledge base, having access to all types of loans. I am categorizing as you're talking, oh, fix and flip, that's what I'm hearing. I have better options. Ultimately, we are going to get that borrower into their final home with a reverse mortgage. But if they want to fix up the home they're in, I would recommend a different loan type for that season. You know, maybe it's just a year to do all that, and then they can sell it for more and move on. Yes.
Okay.
So that scenario would not be a good scenario to take the reverse.
Okay. Well, I mean, this has been really insightful information that you've provided, and I hope that the listeners and the viewers that watch this video will find it helpful. And certainly if we didn't address any other questions, maybe someone didn't see the email blast we sent out, or maybe someone who's not a client of ours, we'll put, you know, your contact information, so that way if they want to reach out to you directly. And, you know, you work here in Michigan, are you in other states? Do you have the ability to do like a Zoom call? So let's say we've got a client in Florida or Georgia or the Carolinas, for example. Would you be able to assist them there, or is it just here primarily in Michigan?
Another great question. Being with the largest broker in the country of reverse, I have access to other loan originators in almost every state, except New York. New York's funky. I don't know why with reverse. So we stay away from New York. I can work with the client that you refer. In addition, bringing in another loan officer that's licensed in the state that they're in. We can Zoom call. Yes, we can absolutely.
So what would be the next steps if someone wanted, I mean, just to make this as far as the process smooth, as just start out with a face-to-face, a Zoom call, like what are the steps and kind of that process?
It. So the process is, let's have a conversation. Let's see if it's a good fit.
Okay.
Let's see if it's a good fit. If it appears to be a good fit, then a consumer protection that's been put in place is that every potential borrower for a reverse attends a Consumer Financial Protection Bureau approved, they call it counseling session. I call it an educational session. Most people don't want to be counseled, they want to be coached. You know, so the good faith estimate that I give the client, the counselor has access to it. And so they go over it with the consumer to make sure they understand it. And if I've done my job right and educated them and informed them and answered questions, when they go into that session, that lasts about an hour on the phone. Some might be Zoom, some are in person. The consumer gets to choose which one they go to. I can't select that. There's two things I can't select: the appraiser and the consumer education class. So I give them the contact for the consumer education class, but I can't pick it for them. I have to give them like 6 different ones. And so that's their first step. Once I get that signed certification, then I can actually give them an application. So I can't even give them an application until they have been cleared that they understand what this loan is. Then I give them the application. Then we do a financial assessment. I ask for their, it's not as much documentation as forward mortgage. Again, I'm looking for, can you meet a basic, in the Midwest, all you have to have left, a residual amount of income per month is $597. And for a single person, $997 for a married couple in the Midwest. So I'm looking to do a financial assessment, just to make sure that they can even afford their taxes and homeowners insurance. Then I turn it into the lender and their underwriting team. They actually fine-tooth comb it. They order the appraisal. They issue a conditional approval. And as with forward loans, there's always little things. Hey, get me the HOA condo docs or something. So we clear those conditions and then we schedule closing.
Okay. Well, I appreciate you coming in today. This has, again, been extremely insightful, and we'll most certainly make certain that our reviewers and our clients have your contact information. And I personally think it's a great tool. And again, having a home that has equity into it, it's really not an asset if you're not leveraging it to your benefit. So I think it's worth at least a conversation with you. And you guys determine where do you guys kind of go from there, and if it makes sense.
Yes.
If it does, it doesn't. But hopefully there's more people that it does, and it can help them, put them in a better position. So
I get excited about educating more people about it because it's the most misunderstood loan type. And as our population is aging, this is a tool that I feel responsible to get out to the consumers and to let them know that it's an option that's available.
Yeah.
And it can help a lot of people.
And I know firsthand that years and years ago, when I first learned about reverse mortgages in the early 2000s, that back then it was something that was even misunderstood when you hear people. And I think a lot of things, if it's something that's used on the wrong application, then certainly it can be a detriment to the individual. But if it's used for the right application, it can be a tool that has a lot of benefits to it. And I certainly have had a lot of clients that have done a reverse mortgage, and they're extremely grateful for it. So yeah, so take advantage of something you can use while you're younger and you're healthier and you're still living.
Exactly. Exactly.
But I appreciate your time today. And again, thank you for watching another episode of Unlocking Medicare with Tyrone Carr. And thank you to Lisa Marshall.
Thank you for having me.
With CT or C2 Financial.
That's okay.
So again, thank you, and look forward to another episode. And again, thank you for your time.